Determining costs. Costs are key to financial understanding. What is the difference between costs and expenses? Cost is an amount you give up to get something you want, whereas expense is the actual money you pay, the actual money you give up to produce revenue. So this may seem like they mean exactly the same thing, but there's a key difference. The key difference is one you actually pay money to do, and one is you might have to pay money to do it. Okay? So for example, it might cost you 10 hours to make tamales, right? But did you pay the worker for 10 hours of work? If you hired an employee, you might have paid that employee for 10 hours of work, and it cost the employee 10 hours, and that was the one and the same. But if you were the entrepreneur and you do 10 hours of work, you might have given up 10 hours to get what you want, but you didn't pay yourself. So expense is when you take a cost and you actually put a dollar amount to it, and you actually put money to it. So cost can become expenses once you pay. So this is an important distinction to note, especially when you are the entrepreneur doing the work, because sometimes you forget to pay yourselves, or sometimes you don't include it in the equation. So you always want to calculate costs and be sure that you understand what is it specifically you're giving up to get what you want. Okay? Costs are not always expenses, but all expenses are costs. So this is a good way just to remember the difference. Okay? So costs don't become expenses until you actually pay money. Net profit equals net income, which equals revenues minus expenses. Okay. Cost categories. There are three main cost categories for new businesses: startup costs, fixed costs, and variable costs. And we've gone over those in a previous section. So look back if you want to review those. So the cost categories, these are what are prior to opening, to actually selling your first unit. This is what it costs to get your business up and running. Imagine a restaurant. You have to rent the space, you have to get all the furniture, oven equipment, you have to train the staff, you have to figure out the menu items, you have to do the taste tests, all those things that you have to do. Those are all startup costs to running a restaurant. Anything that leads you building up to selling your first unit. Once you get that unit up and running, right, you might have additional costs like accounting, legal, consulting, all these things. Once you get it up and running, then it's no longer startup costs, okay? And it becomes a fixed cost. Those are the costs to keep the business running. And those might be things like rent, utilities, insurance, advertising. These are not the costs to offer the specific product or service. So for example, in a restaurant, it doesn't include the work to make the food. It doesn't include the cooking staff. It may not include the wait staff. It may not include the food itself. It's just the things that you would have to pay whether you sold 0 units or you sold 10,000 units. This is the fixed cost. It has nothing to do with the variable amount that you sell every month. And then the variable cost, it's the cost to make each unit. So these are direct variable material costs, like the cost to make each meal, the food. It would be the direct variable labor costs, so the cost to pay to make the food, and other variable costs, so that might be the wait staff. Okay. So the main difference between variable and fixed is, again, if you have to sell one more unit of food, who are you going to pay? Okay. All right, next up is setting the price.